Hi, everyone. How are you? Hope you are well. So, today we're going to talk about questions to ask the lender. Question to ask the lender. So, number one, we're going to ask about down payment assistance programs. So, if there's any funding available to you, such as down payment assistance programs, the lender actually has this information. Lenders partner with down assistance of payment programs. So, as the lender. They're working with them anyway. So, down payment assistance programs are usually for first time home buyers, but for people who have not owned a home in 3 years, they also qualify. So, don't forget to ask the lender about down payment assistance programs because this could be funding that you could have. But if you don't ask, then they probably won't bring it up on their own. So that's number one. Ask about down payment assistance programs because the lender does have access to that and they do partner with those programs. Second question to ask the lender, ask about fees. They have all of this information on a piece of paper. It'll be this long list of fees. And so they can actually tell you what the down payment will be and what the closing costs will be based on the value of the property that you're buying. So you'll have all of this information beforehand. So there are all kind of fees. There's the down payment and then there's the closing costs. So whole bunch of fees. You got the appraisal fee. You have to pay for an appraisal. There's attorney fees, homeowners insurance, lender's fee, underwriting fee, processing fee, carrier fee. There's also the ability to buy down your rate. So they call them buy down points. So instead of having a high rate, you could have a lower rate based on how much money you pay. So you could either decide to buy down the rate or not buy down the rate. So ask about that. Ask about the buy down rate. How much is it and how much will it lower my rate? So those are some questions to ask because the lenders have all of this information. So don't forget to ask about the fees. What is my down payment? What is my closing cost? Explain the buy down rate to me. Explain points to me. What are points? Explain that to me. So if I want to decrease my rate, how much will I pay? And how much will that decrease my rate by? So they have all of this information. So just be sure to ask. You could either ask ahead of time, but if you don't ask, what's going to happen is they're going to end up mailing you a packet which will have all of these fees listed. So they have the information right there in front of them. So go ahead and ask. So that is the number two. Ask the lender about fees. So you'll be knowing ahead of time what is expected of you when it comes to how much money are you going to have to bring to the table for the down payment? How much money are you going to have to bring for closing costs? How much are you going to have to pay for the appraisal fee, the attorney, owner's insurance, and then all these little extra fees that they're adding: lender fee, underwriting fee, processing fee. So all of this information is available to the lender, and they can tell you this information. And they can tell you beforehand because they have the information already. Number three, another question to ask your lender. Ask them, what's your credit score? So when you go to them, they are going to actually pull up your credit score. There's going to be three scores: your Equifax, your Experian, and your TransUnion. And they can see all your three scores. So ask them what it is. And then if you'd like a printout, have them email it to you. Also, your debt to income ratio. So, some of the factors they're using to decide on whether to give you a loan or not is your credit score and your debt to income ratio. So, ask, what is my credit score? What is my debt to income ratio? So, different lenders, they have different qualifications. Some lenders, they want your DTI to be around 43% or less. Others are 50% or less. So it varies by the lender. So, what is the debt to income ratio? So, basically, and then keep in mind, this is a traditional lending process. There's a whole different process on this side called the creative financing process. And if you're interested in the creative financing process, if you would like for me to bring on someone who can give you all the details of the creative financing process and all of your options, then put it in the comments, creative financing. Okay, so back to the traditional. Traditional is what we all hear about, what we're used to. So the traditional process, they're looking at your credit score, they're looking at your debt to income ratio. And so to get your debt to income ratio, they are looking at your monthly debt. What is your monthly debt? How much is going out every month? But they don't include things like utilities and groceries. So all your debt for 1 month. Say, for example, $6,000 is going out every month. Just an example. Everyone has different numbers. Some people live on way less than this, and other people live on way more than this. So this is just an example. $6,000 is going out every month. That is debt to pay your debts, your bills, and then dividing that by your income that is coming in, and this is your gross. So before any taxes. So just a made it up example. Say 10,000 is coming in gross. Just a made up example. So you're going to take 6,000, divide that by 10,000, your gross income. And gross income, that could be from a job. The traditional lending process, they like W-2s. So it can be from your W-2, but it could also be from things like rental income. Ask about other types of income that they are willing to accept. So you take your debt, your monthly debt, divide that by your monthly gross income. That's before taxes is taken out. You get 0.6, multiply that by 100. Your debt to income ratio is 60%. So guess what that means when they do this calculation? That means this is not below 50% and it's not below 43%. Remember, different lenders, they have different criteria. This is not below 50%. So guess what's going to happen? They're going to deny the loan. So that's what they're looking at. Your DTI, your debt to income ratio. They're also looking at your credit score. So those are some 3 questions to ask the lender. Also, your lender should be preparing a plan for you. So if you are denied, they don't just say, okay, you're denied. They will tell you why and what you can do to fix it. So sometimes it's your credit. Maybe your credit is not high enough. Maybe it's your debt to income ratio. So um, the lender should be coming up with a plan so that eventually you will get approved for a loan if you decide to go through the traditional path. So in this event, you will work on the things that you can work on. Like you can work on improving your credit, you can work on paying off your debt, and you can also work on increasing your income. So you could be working on all three things simultaneously. However, you don't want to just stop with this lender. Um, keep going to other lenders because, like I said, different lenders they have different criteria. So keep moving. All right, and then there's this whole other side of this, which is the creative financing. The traditional lending is a lot more strict. There's a lot of rules, there's a lot of regulations. They're looking at your bank statements. They're looking at your bank statements 2 months prior to the date that you applied. So they're looking, do you have any insufficient funds? They're looking for those. Do you have insufficient funds? Do you have bounce checks? So you want to make sure that it's clean, that you clean it up. They're looking at the W-2s. They're looking at your pay stubs, bank statements, taxes. So some may ask for taxes and some may not ask for taxes. Generally, they want you to be working for 2 years and it doesn't have to be at the same job. So you could be working here, 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 and here. As long as, it's a 2-year work history. And I have also heard of other cases, like there are exceptions to this when it comes to working for 2 years. They do have other exceptions that I heard of. For example, maybe you haven't worked for 2 years. Maybe you just graduated from college, but you just got hired and your employer wrote you a letter saying that you're hired. And I have heard stories of a lender just taking that letter. I've heard of exceptions like that. So those are 3 questions that you can ask the lender. Down payment assistance programs, they partner with them. Ask about the fees so you can know everything up front. How much are you expected to come up with for the down payment, closing costs? Ask about buying down your rate. How much would it cost to buy down your rate and how much lower can you get the rate? Then ask about your credit score and your debt to income ratio. And then make sure that you have a plan. So it could be an approval, it could be a denial. If it's a denial, then just work on cleaning up whatever it is you need to clean up, whether that be the credit, debt, um, increasing income, and then keep going to different lenders. Don't stop with that one lender, and then learning about the other path, which is the creative financing path. All right. So if you like the channel, please hit the like button. If you're not a subscriber, please hit the subscribe button and notification bell next to it so that you won't miss an episode. Also, leave a comment. If you want to know about the details of creative financing, leave the word creative financing, and then that's it. So thank you for watching and have a good rest of your night.